In this video, I'm going to do a deep dive into the end of month financial results for Archi Demo Co. We've kicked off stage 2 of 52 Smith Street. Jones Street and Bunyip Hills Hospital are going along nicely, and Cheap and Nasty Lawyers about halfway through. So sit back, grab a cuppa and take a front row seat as I pull together all the information and overlay the profit metrics framework so that we can see what's going on and decide what our next steps are. The profit metrics framework provides a structured and strategic overlay so you don't miss anything when you're trying to figure out what's going on with the business. It enables us to answer 3 very important questions. Are we on track to meet our target? If not, why aren't things going to plan? And where are things heading in the future? But before we can get to that point, before we can even start doing our analysis, there is a bunch of things that we need to check, a bunch of work that needs to be done in the background before we can be satisfied that our results have accounting integrity and are correct. That's important because you'll never be able to work out if you're on track if you don't know where you are now. And nothing derails a board meeting quicker than reports you can't rely on. The first step is to make sure we're happy that the balance sheet is bulletproof. And after that, there's a bunch of reports we can go through to understand the relative performance in the P&L. Finally, once we're comfortable with the actual results, we want to have a good look at our forecast to give us comfort that we're going to hit our sales target, have the right amount of people to deliver the work, and we're not going to run out of cash. Once all this work's done, we'll be in a great position to have an insightful strategic discussion in the boardroom about our future goals and decide what we're going to do to keep things on track. Without having all this information and having confidence that it's right, you simply can't have these discussions. Okay, let's get into it. So the first thing is to make sure that the balance sheet is bulletproof before we can be confident in any of the other numbers that we're looking at. So each month we'll prepare a balance sheet reconciliation file, and we'll go through this balance sheet item by item and prove up or substantiate the balances by tying things back where we can to source documents. There's a couple of areas that are a little bit different. They're integrated with the P&L, but we still need to check that nothing's been broken there. So things like the trade debtors, trade creditors, and fixed assets. So bank recs, we can go through and see them in zero. Trade receivables, we can get our balance there. And then we're looking for any stale or doubtful debts and looking to see what impact this is going to have on our cash flow. And we can see here straight away, Cheap and Nasty Lawyers haven't yet paid us anything, so we need to be on that, make sure that we get paid. The fixed asset reconciliation, we'll be looking to make sure that the written down value ties back to the balance sheet, but also that the monthly and cumulative year-to-date depreciation has been booked correctly to the P&L. And then the rest, we've got things like prepayments where we're amortizing all of our big chunky expenses, software licenses, P&I insurance, subscriptions, that sort of thing. We calculate our tax provision and we work out all the balances of all the accruals for things like staff leave entitlements. Now there's a problem with the staff leave entitlements for year-to-date January, and I'll talk about that when I do the P&L review. We'll make sure that the loans all balance, directors' loans. We can see here Director 2 had a payment of $50,000 through the month that we'd talked about in the prior month. And finally, we need to work our way through the work in progress. We need to review the time and billing or job costing reports to identify any WIP and make sure that we've billed whatever we can. And in this case, the WIP's actually rising. We started the year at 0. And we're now up to 195,000. We need to bring that back down and invoice our clients so that this doesn't start to hurt our cash flow. So working down, we've got 52 Smith Street. We can see in the month here that we've done a bit of extra work, and that's progressed us up to 40%. And the job's in a healthy profit, but we've got about 155,000 of that 195 is related to Smith Street WIP. Jones Street's going well. We finished off that stage. Bunyip Hills has 113,000 loss to date. Tech Bros was just a little bit of tidying up. We said we were at 100% last month. We probably weren't quite. And the Cheap and Nasty Lawyers. At the moment, that project's going on well. We're at the 50% mark. We've got 10 grand in WIP, but the project's currently 64,000 in the red. So we'd like to try and get that one back on track as well. So overall, we can be satisfied that we've reviewed our job costing. Everything hinges on this percentage complete. And there should be, best practice should be, that you've got a cost to complete calculation. 1 minus cost to complete is percentage complete. So that's why that's so important. I'm going to assume that we've done that and that these percentage completes stack up. Once we're happy with the balance sheet, we can now trust and rely on the P&L numbers. Now, I've said this every month, but I'll say it again because it's really easy to fly off on tangents and go down rabbit holes chasing after small stuff. So before we immerse ourselves in the detail, we need to do a high level or summary level sweep through of everything first. And remember, this isn't an exercise in finding out why we used more imaginary pens and pencils or A4 paper than we budgeted. It's about understanding what's just happened and how it affects our long-term goals. I mentioned earlier that there was a problem with the annual leave provision year-to-date January. And same as the imaginary pens and pencils, we aren't doing all of the transactional bookkeeping to build up our balances. So we didn't have a leave report that we could balance back to. On reflection, something just didn't look right in the P&L. And what it was the credit coming back from the provision when we had our 2-week shutdown. So I've made that correction. I've adjusted our prior periods in the P&L and it's added about 100k back into the bottom line year to date. To make our P&L review easier, I've colour-coded things where pink is the actual, green is the forecast, orange is the original budget, and purple is the revised budget. So the first of these summary reports is the actual versus budget for the month and year to date. We don't want to get bogged down in the detail here, but we can see that for the month things were slightly better. Year to date we're about 140k better net profit. Our revenue's higher and our costs are lower. And part of that will be that we had an opening balance in our provision for leave account and we've used that over the Christmas. So it's actually money that was expensed in prior periods has come back as a credit to boost up the profit year to date. The next thing we want to do is have a quick look at the future and say, well, what are we projecting relative to our revised budget and our original budget? And we can see that we're going to be 50k up on what we'd revised our budget to, 45k up on the original budget, and it's about 100k more in net profit. The KPIs are great for showing trends and looking for areas that we need to hone in on. And the big ones are the utilisation. We can see here that over December, January, February, our utilisation's been quite a bit more than we budgeted. And that's rubbed off into the net profit being more as well over the last few months. So people have been more productive than we'd expected over the Christmas break. That could have been due to deadlines that we had to keep. The work in progress is a useful chart. We can see here we didn't have a budget for it this year, but it's growing on us and we need to get that build out or it'll start to hurt our cash flow here. We can see that we're forecast to receive it. The overhead's looking pretty good and the multiplier for the month was 2.39, year to date 2.75. And I suspect that that's mainly to do with the WIP. And really we're just trying to get a perspective on how we're going against our plan and if there's any obvious problems at the moment. But so far it's looking like we're going to finish up the year better than we first thought. The next thing we'd want to do is dive into any of the variances and start to understand them, because there could be clues here that there's a future impact for this as well. So we'd go through here line by line, look at these variances, try and understand why there's differences, get an explanation for that, and then take that across into the forecast to see what impact it is going to have out here in the rest of the year. And we can see on this slide again the adjustment that was made to the annual leave accrual coming back, and then subsequently we're putting in what we expect the net to be each month. Now overall, if you've got 4 weeks of leave and you take 4 weeks of leave, then the P&L impact should be every month the same. But the reality in architecture is that there's a Christmas shutdown of a couple of weeks, so it has to be modelled a little bit more precisely, and that's where I got caught out. So we're all set up to go now moving forward. So now we can segue over into the revenue forecast, now that we know what our actual for February's been. And we can see that that was better than budget. but our full year sales pipeline forecast is still 32k under our original budget. The actuals for February has meant that it's improved by 48k since we last looked at it a few weeks ago when we did the revenue forecast update. We're expecting the rest of the year to be at 2.68 at about a 96% realisation rate. So again, it's looking possible, but we need to manage our pipeline now. We've got some unsecured and some marketing targets that we're counting in this full year forecast. So they are here. Things like Affluent Ambience, they haven't started yet, and all of these marketing targets there. This comparison is really important because it allows us to look at what we're capable of making, our capacity, versus what we've actually got in the pipe ready to go. And any gap there is going to tell us that we might not make the money that we thought, or we might be being too optimistic. When there's a gap in the sales pipeline revenue, it means you've got to be marketing. You've got to get those projects going. You've got to turn them from marketing targets into real clients. When there's a surplus, you've got to look at your headcount. So that's what this comparison's really handy for. What we're trying to do is match the right amount of people with the most efficient way of doing the work so that we can make as much money as we possibly can. Once we've satisfied ourselves that the P&L's good, the balance sheet's good, we then need to review the cash flow. And we can see here that we're well over the $1 million each month. We've got the $1 million on term deposit. So we don't really have anything to really worry about here. Everything's been plugged in from our full year forecast. So it just gives us comfort that we're not going to be running out of cash. Once all this work's done, we're now in a great position to have an insightful strategic discussion in the boardroom about our future goals and decide what we're going to do to keep the business on track. Okay, so that's the review wrapped up. We can button up this information pack, send it out to the board of directors, and the next video will be the board of directors meeting for February. We'll see you there. So if you've enjoyed this video, hit the like and subscribe button, tell your friends about it. There's plenty more updates coming for Archi Demo Co in the future. And if you'd like any more information, jump on our website, www.custodianbackoffice.com, and there you'll find plenty of resources that'll help you get started with better financial management in your architecture practice. I'm David Dillon from Custodian Back Office. Thanks very much for watching.